Hello and greetings to all my participants across across the EPS channel, YouTube, Twitter, Facebook, and LinkedIn. Welcome all local participants as well as from abroad. A warm welcome to all of you. We get you the best topic and best speakers to provide you with precise and productive information packed in 1 hour between 3 and 4 India Standard Time. You also get an opportunity to ask questions using the Q&A chat box, as well as ask a couple of direct questions to the guest. The humanitarian economic fallout of the COVID-19 pandemic has upset the global balance, as I think we all are well aware of that. No person, no industry, or any aspect of society remains untouched. Everywhere COVID has had its impact. Businesses have challenges in survival, and quite a few are staring at their existential crisis. Many of them, typically the small and medium enterprises. Their credit exposure is unsustainable, and they need additional capital to absorb eventual blows out of stressed assets. Can they survive with additional loans or go down with the burden? Can we afford closing down of our business, which are grown over decades? Banking and financial sector expecting exponential rise in bad loans. They need additional capital to absorb NPA. The COVID, because of the deferment of loans, will also have an impact of additional NPA coming up. Who will fund them for capital? If they can't get additional capital, then what happens? Can our financial sector survive first to provide survival kits to others? The question is, I'm sure to everyone's mind, can we overcome this crisis? Yet the challenge to come is daunting and the path uncertain. Economists are not too enthused, about a pickup in growth, arguing that there are a lot more moving pieces which still need to be fixed, but fix we can. To discuss the revitalizing of the credit growth in India, we have with us for the first time Mr. Kishor Kharat. Mr. Kishor Kharat is an acclaimed banker with over 40 years of experience in India and abroad, including UAE and the West Indies. I mean, West Indies in the sense, there is no country like West Indies. It's the Trinidad, Tobago, Guyana, all put together. So he was also out there. He was the MD and CEO of Indian Bank, and within a short span of 16 months, guided the bank to be India's #1 bank. Immediately before Indian Bank, Mr. Kharat was the MD and CEO of IDBI Bank. He was also the chairman of IDBI Capital Markets and Securities Limited, and held various chairmanship and director positions in asset management and life insurance of various banking companies in India and abroad. Wow. I mean, this gentleman has got it all with him. He's got tremendous experience. And I think today's discussion will be of immense value to all of you participants. If somebody is missing out today's show, I think he's going to miss out on something very, very useful and productive information that Mr. Kharat is going to give you. Good afternoon, sir, and welcome to the Business and Banking Dialogue Show.
Good afternoon, Mr. KK. Thank you so much for such elaborate introduction of myself.
Thank you, sir. I mean, your credentials are so good. I said I must talk about it.
Thank you so much.
Sir, on the topic, I did say, are we going to survive? Sir, can we overcome this crisis and survive, sir?
Yes, we can. In fact, you have done excellent opening remarks. And these are the questions which are bothering on everyone's mind today, whether it is a businessman, whether it is individuals, whether it is the government authorities, whether it is the Bank of India, because the way our economy is actually going through critical phase, the survival itself has become a questionable. But I am sure we can survive because our economy has a lot of resilience. And its resilience actually comes from main two factors. What I feel is once this economy is characters. Our economy is a character is a multi-sector economy. That means we are not dependent on one or two or three sectors. Like some economies are dependent on, let's say, oil. Some economies are dependent on only tourism. But our economy, if you look at it, it's a depending. Actually, it's a combination of multi-sectors, wherein the risk is spread, wherein actually our economy continuously keeps on kicking.
Yeah.
Second important factor of our economy is our population. We are blessed with our population, which is having excellent quality as well as the demography. So these two factors will always, keep on giving some kind of boosters to the economy. And based on that, I am quite confident that we can survive these existing issues also. No doubt, this is actually unprecedented. We had gone through many such cycles earlier also. Of late, 2008 and 2011 financial crisis also we have seen, but nothing like this, wherein entire economy is shut down, and not only of India, but entire world's economy is shut down, not only for 1 day, 2 day, but almost 4 months now.
Yes,
And
yes.
therefore, this is a challenging time. But when we start discussions, I can explain how we can survive. I'm
Sure.
quite confident that we can survive and we can come back on in our good shape. Rather, ours is the economy which is going to bounce back much quicker than any other economy.
Thank you, sir. I think you did point out two important things on and why you feel so confident about the economy, the resilience that you talked about, the multi-sector economy. There was a time when we were like totally dependent on agriculture. We are
Yes.
not anymore, right? We have kind of year after year after year, that dependence on agriculture has been brought down, and other sectors have started climbing up. Whether the services
Yes.
sector, IT sector, the industrial, so and agriculture, of course.
Yeah.
So I think that's a very pertinent point that you make, so thank you very much. So what are the implications of the economic crisis on the credit scenario in India? And that's a topic we are talking about. Can
Yeah.
you please give our audience an update on the credit cycle as well as credit market, that is supply, demand, and consumption of credit in the current situation? Sir, I might as well tell you, we have in our the participants are many are experienced bankers, but some are not so experienced and some are not really there. So a good perspective to all of them will bring them all in one plate.
No, good. Now, you have chosen a very wonderful topic today, that revitalizing the credit and revival of economy. Now, when we talk about the revitalizing credit, it implies that credit has weakened. And why the credit has weakened? It's because of the weak economic situation today. Unfortunately, what has happened, Mr. KK, you must have observed that our economy, while we enter into COVID-19, that time itself, economy had started much before that, at least few quarters before COVID had hit the entire world and our country, our economy had started slowing down. And those few quarters, if you look at the even data which is available on various public domain, that shows that economy was slowing down. And with that slowing down economy, we entered into this COVID-19 situation. Again, because of the COVID-19, most of the units were closed down almost 4 months. This is an unprecedented situation. No one actually knows how to handle it. So everywhere, people are trying, the government of India is trying, regulators are trying to control the situations to the best of their abilities. And they have been actually coming out with various measures also. But then, since nobody has any experience of handling this kind of situation, many times we are actually going back and forth on certain measures what we are taking. The longest lockdown so far, anybody must have seen today, whosoever is living human being in the world, The longest lockdown. I at least I had not seen in my 41 years of banking career this kind of lockdown, and that also worldwide lockdown. This obviously has draconian impact on the business units. Many of the business units were closed. Because business units were closed, there were no cash flows. Businesses were actually spending more on their fixed expenses. So entire cash flows or reserves, whatever were available, they are now dried out. The customers, because it was a lockdown, the customer demand, customer preferences also got changed. Earlier, whatever our rather choices were there, our preferences were those have got totally changed. COVID has taught us one thing, that what is essential and what is non-essential for our living.
Yeah.
So out of whatever money is there with us, whether it is a businessman or whether it is an individual, today everybody is scared to even spend money. They are spending this money very sparingly and only for the essential things. Businesses were closed down. Very few businesses were open, only for those which were actually required in the essential services. But otherwise, because businesses were closed and because it has impacted a draconian, rather very serious impact on their financials, today, most of them are actually staring at even closure. When you talk about the MSMEs, I read that almost minimum they are saying 25 to 30% of MSMEs are actually standing on the verge of closing down, because financially they are so weak, it is difficult for them to come out. That means there is one side, there is no production, there is no supply because there is no demand. The industries are not functioning right now. Everywhere, because of the economic impacts, the all state governments and central government also has started reopening the economy in a phased manner. Only in certain areas there is a lockdown where there is a lot of containment zones they have created and lot of cases are there. But other than that, economies are open. But when these businesses are opening, they have few more challenges in front of them. These challenges are operational challenges as well as financial challenges. When we talk about operational challenges, they don't know the situation of their business. They don't know about the forward and backward linkages of their businesses, whether their businesses will come back on the same level which they had started, whether their production capacities will reach to that level, when that will reach to that level, what is the quality of their machineries, what is the quality of their furniture fixtures. Everywhere they may need to in fact put in extra money for in fact getting back to back on track. So there is a requirement of fund, but existing funds, whatever they were using, and mind well, in our country, most of the businesses actually run on credit, because our country otherwise is also capital starving country. In our country, not much capital gets generated. Most of the businesses which start, actually they put their life savings in the businesses, and businesses actually take a lot of loans from the banks. Every and each asset which is created, actually it is on the loans. When you talk about the MSME, I can tell you boldly that 90% of MSMEs actually are dependent on bank credit. And therefore, when they are having these problems, the credit itself is actually become unsustainable. When the existing burden, when existing business is not running, other side you have the loans on your head and those are unsustainable, it is becoming very difficult to repay. Considering this, Reserve Bank of India actually came out with moratorium. First, there was a 90-day moratorium, but because COVID was again not under control, they extended very wisely for another 90 days. The question is, this moratorium has given them definitely some kind of relief insofar as their repayment is concerned, because as I said, there were no cash flows for the repayment to meet the repayment obligations. Reserve Bank of India came out with the moratorium, but what happens after 31st of August when moratorium gets over? Actually, because of moratorium, on one side you have got relief from payment of this your EMIs as well as interest. Other side, it has actually created a bunching of your debt obligations, and suddenly it will become due after 31st of August, because so far there is no plan that how to treat that burden which has got created. So that means when we are talking about revitalizing this credit, we need to first understand what is the situation of existing credit itself. Then we need to strengthen that credit. that goes actually in tandem with what is the situation of business units today. And again, I will say as a experienced banker that one size fits all measures or policy will not work, because every individual has a different problem. Every individual unit will be facing different financial challenges, different operational challenges, and the bankers will have to sit one-on-one with them. Of course, Government of India has come out with various supports. Reserve Bank of India has given a liquidity support. Government of India has come out with that uh, scheme of guaranteed loans up to 3 lakh crores. But whether that is sufficient, whether businesses are in a position to avail those loans, these are various questions which are bothering in everyone's mind. In my opinion, we'll have to take a concerted efforts to see that how businesses are also survived, and at the same time the financial institutions are also not in a very difficult situation, because as you in your opening remarks says, banks are actually staring at uh, again a huge spurt in the NPA accounts. Reserve Bank of India 2 days back they have declared their financial report. There also they are expecting that on a baseline scenario at least 12.5% NPA will reach from less than 9% today, and in a worst scenario it may even reach to 14.7%. That is extremely worrisome if it happens that. And if I hope it should not actually go to that extent. Before that, if we are in a position to take some measures, definitely we can control this situation also. And then once we understand what is the situation of businesses, how they can survive, after survival, how they can revive, because as I said, their existing debt is unsustainable. Whether additional debt, giving them additional debt will help, they definitely need money, because as I said, most of them are actually surviving or actually growing on bank credit. When bank credit is not available, they will die. So they will need additional funding by way of credit. So existing plus additional funding, we'll have to see that how that becomes a sustainable. Means existing plus additional one. Both has to be become sustainable. Then businesses will survive. Then once economy starts, getting into normalcy, which is now actually everybody is looking at that in next at least 3 to 6 months times, we should see normalcy. Fortunately, in our rural economy, there is a buoyancy. Rural economy is going to actually bring a good kind of development or good kind of growth in rural economy. I can tell you for that. Slowly, once our MSME sector also comes back into shape, I'm sure we can look at, because MSME, individuals, agriculture, these are actually drivers of our economy. I think I will stop here. We can further discuss how
Yes.
to take it forward.
Thank you, Mr. Kharat. I think you have given us a very good overview, a 60-foot view or a bird's eye view, as they say, of the credit flow and where does the MSME stand, and what are the impact that COVID-19 has on MSME. I think it's a fantastic overview you have given to us. I'm sure the participants like it. So, ladies and gentlemen, it's 20 minutes past the 3 o'clock, and this being a topic which is like almost on everybody's mind, I'm opening up the question and answer QA box for you to start asking questions so that I don't leave out questions. Yesterday, there were quite a few questions I had to leave out because we ran out of time. So today I would want to avoid that. So send your questions early, because this topic is such that you all know about it. So I look forward to your questions. Sir, the subordinate debt provision, equity infusion, and the emergency credit line, that is what we call as the ECLGS for the
Right.
MSMEs. We were talking about the MSMEs.
Yes. Yeah.
Some of the major policy interventions made by the government as part of the Atmanirbhar or Atma Bharat Abhiyan or self-reliant India mission. A substantial part of this scheme aims to ease the credit flow to MSMEs. Why this has failed to enthuse interest among the MSMEs? They don't seem to be there. They don't seem to be excited about it. Why?
Yeah. Good. Actually, you asked a very good question, because We need to first understand our MSME sector. The government of India has certainly done a good job by giving that 3 lakh crore emergency loan, and they have also offered a credit guarantee to the bankers. So bankers' apprehensions also are taken care of. On other side, Reserve Bank of India also has created a liquidity. Reserve Bank of India has also helped and created a path for reduction in rate of interest. That is also going to help the MSME. So all enablers have been created. But still, if MSME is not availing that loan, we need to understand why they are not availing that loan. Yesterday also I was on one of the webinar, and there we saw that out of 3 lakh crore, whatever whatever the loan scheme announced by Government of India, whatever sanctions are there today in all banks put together is around 1.32 lakh crores. The figure must have changed from because of Monday's disbursement, if any, and disbursements are again lower than 1.32. That means MSMEs have not so far availed this 3 lakh crore, whatever was scheme was declared by Government of India. Initially, the bankers were expecting that by 20th of June, this entire 3 lakh crore may get exhausted, and they may have to again request the Government of India to increase this. But that has not happened, only because the COVID situation has not come under control. I can say for that. Because today, as I said, very recently, the rather from the month of you can say 15th of July onwards, even many parts of country were closed down up to 23rd of July. Just 2-3 days back, majority of the portion had started reopening. So on one side, when businesses are closed, MSMEs find it difficult to actually go for another loan. If you break down the MSMEs, actually MSMEs are again in all sectors, all segments rather. MSMEs are in manufacturing, MSMEs are in services, MSMEs are in trading. When you look at the MSMEs in the manufacturing sector, what is my observation is around 40% of MSMEs in manufacturing sector are actually ancillary units, and they don't have final product which can go directly in the market. Otherwise also market was actually open only for essential goods. But these 40% MSMEs are very much dependent on a larger units. And since larger units are also closed down, larger units are also not actually producing anything, and their sales are also not there. There is no demand from these MSMEs. Obviously, they were closed down. Secondly, the services sector MSMEs are also hit very badly, because most of the services sector again have suffered a lot in this pandemic. And in traders, we have seen whatever small borrowers and MSMEs which are actually coming under that segment. I say because actually as per the MSME definition, let us not go. But if we look at the micro, small and medium enterprises, that I'm taking that enterprises word to actually group them, all of them together. So in trading also, very few units were functional, like medicine shops, the grocery shops, milk shops, vegetable vendors. Rest all were actually not opening. And the recent experience of people, those who had in certain areas of our country, other shops were also allowed to open. And I used to see on televisions the interviews of the shopkeepers. They are saying we have open shops, but people are not coming to buy. Again, social distancing is an issue. Again,
Yeah.
in some certain areas, there are still restrictions about the timings for coming out. And as I said earlier, people are scared because there is no income. Actually, yesterday I was reading that more than 40 million people actually have lost their jobs. Now, when on one side people have lost their jobs, on other side businesses don't have any income. So where are the money to spend? And because people are not spending money, there is no demand, there is no sale. In this situation, all the MSME units, as I said earlier, as it is, they are having existing burden on their head, a loan burden on their head. They are saying banks are sanctioning us additional 20% as per the government. But what do I do with that? If I take that loan, that is going to create additional burden for me. Some of them have availed because their businesses were allowed to open, or I have my own doubts whether that money, which whatever they have availed, whether that will be used for productive purposes or consumption purposes. If it goes into consumption purposes, then it is going to create another, rather the whole is going to be a bigger insofar as that particular unit is concerned. So on this background, what your question was, why there is no response. It's only because of all these reasons. I believe that people are still not in a position to avail those loan schemes.
So you talked about MSMEs and ancillary units, services units. There's also a lot of startups who have come into the
Yes.
MSME. And, there is this problem of policy and execution. If you go to the banks, currently they are saying, yeah, there is this scheme for MSME, but that they only give top-up loans. They don't give fresh loans.
Yes.
They say we don't have any direction to that from the top. So which means there is this big lapse, big gap between what is the policy saying and what is the execution that comes to the ground to the each of the bank. And thereby the startups are started closing down because they aren't getting anywhere. So that's another big part of our economy which is suffering. The startups the young guys who have started that are filing this. So I just thought I'll bring it up to your notice on that. And also that's a factor that we need to look at. So ladies and gentlemen, I continue to discuss with Mr. Kharat, and please send in your questions, and I'll try to take it across to Mr. Kharat. So it has been observed that credit, we talked about the lack of enthusiasm. Let's look at the utilization. It has been observed that credit utilization has suffered despite banks sanctioning large number of credit limits. Only an uptick in demand drives credit growth. What needs to be done to ensure credit growth in the next year, financial year 21, where the country could see a negative growth of 5% in economic activity? Whether it's going to be 5% or more, it's still, we don't know how much is going to be some people are saying it's as high as 10%. But anyway, so the question is, where the country could, what should be done? What needs to be done to ensure credit growth in FY21?
Mr. KK, what I feel, the trigger for demand anytime actually lies in how much money you have in your hand. Today, when people are not having money in their hand, it's very difficult to kick off the demand. And whatever money we had, actually government of India also gave a lot of money in the hands of actually those people who are at the bottom of pyramid. But again, that has not helped much to kick up the demand the way it should be. Perhaps, as I said earlier, many of the sectors were not ready for the businesses, and therefore the demand also was not there. Businesses also were not ready to work. But one thing is there, that our rural economy this time, there was a expectation is a good monsoon. There is a good kind of rather 130% more sowing is done in most of the parts. So we are expecting very good agriculture harvesting. Out of that, there will be good income level at the agriculture sector. In fact, most of the FMCGs are today looking at only rural India insofar as their growth is concerned. So once our rural India actually comes back in shape, that is also, even though it is at the bottom of pyramid, we have to look at that now bottom up approach, that once our rural economy is actually developed, the MSME also slowly once we are opening up economy, MSME also will come up, because MSME is again a second largest employment generation sector. So after agriculture, MSME gets up, then other sectors like affordable housing construction, the automobile industries where motorcycles and all those affordable automotives are actually much in demand. So slowly this demand will start picking up only when employment gets generated and businesses starts getting their income. Businesses will start getting their income once the economy is open up. So it's like a vicious circle. So economy has to open up. Now many businesses are saying we open the businesses, but there is no demand. But they will have to rather wait for the demand to get. Demand will definitely come, because as I said, our country is blessed with the second factor, that is our size of population. Sometimes we talk about whether it is a boon or bane, but I feel in this situation it will prove to be a boon for our economy, because of the large population, the demand is going to get triggered. And once the demand gets triggered, people get money in hand. I'm sure this cogwheels or these wheels of economy will start definitely moving forward. Government also is focusing on one by one sectors.
Yeah.
The real sector also, once it starts kicking up, I think we will be able in a position to come back. But only thing, the question is how long it is going to take. It's a $1 million question actually.
Yeah. We don't know those. The certainty of time is just not there.
Yeah.
So before we take up some questions from the participants, let's look at the bank's credit risk infrastructure. I think this has been unprecedented nature of the COVID-19 crisis, but it has also, shown up the chinks in the bank's credit risk infrastructure. What is the way forward for the banks to negate the impact of a weak credit risk infrastructure?
See, actually, today we are in a very, what I can say, a challenging time for us. Whether we should liberalize the norms and relax the credit, or whether we should tighten the norms and go ahead, because whatever norms earlier were there, at that time we had never expected this kind of pandemic. Because normally whenever bankers are doing some kind of a credit appraisal, let me tell you, they always do some kind of sensitivity analysis. And when we do that sensitive analysis, we say top line or bottom line, suppose if there is a variation minus 15% or 20%, what will happen. So beyond that, we had never thought that beyond that also variation can be there. And that variation has come because of this unexpected disruptions by the way of this kind of pandemic. So perhaps going ahead, suppose if I say no, my that earlier situation, what I was calculating, the credit appraisal was not good, that means I will have to tighten. If I tighten my credit appraisal systems, nobody will get loan today, because ultimately bankers are custodian of public money. We always have that sense of custodianship or sense of responsibility towards the public money. So therefore we take lot of due diligence and care while sanctioning the loans. If there is a viability in the business, if the money is going to come back, then the banker will definitely lend. But if there is any uncertainty about the viability itself, then banker will not get any confidence for lending. So in this kind of situation, uh, how to move ahead? You are asking me what is the way forward. The way forward for the banks, in fact, the government of India, because of perhaps this kind of situation only, government has given a blanket cover that okay, we will give you guarantee of 3 lakh crores. But even then, uh, outside that, there are many units outside that guaranteed loan. Many units will be falling. What about that? Whether they will get support or not. So, in my opinion, on one side, uh, we have these critical challenges. On other side, we have to look after the safety of public money also. So we'll have to strike a balance. Perhaps the bankers will have to built in certain appraisal systems to take care of this kind of unprecedented disruptions also. We may have to look into balance sheets of the companies. If the companies' balance sheets or the borrowers' balance sheets are over leveraged, perhaps we'll have to uh, uh, discourage those kind of borrowers. Then future projections also, many times whatever borrowers are giving, we'll have to look at it very categorically whether that is possible or not. The capital from the stakeholders, capital from the promoters will have to be increased. I'm talking from how bankers can strengthen their credit appraisal systems. Then bankers also will have to look at the security. What is the security there? But if we apply all that, as I said, perhaps it will be difficult for anyone to get the loan. Now, if the economy has to survive, all these businesses have to survive. If all these businesses have to survive, that means somebody has to give a helping hand. And therefore, this is a time for everyone to put their heads together, whether it is the bankers, whether it is businessmen, whether it is the government of India, whether it is the Reserve Bank of India. Everybody has to understand the criticality of the situation and create some kind of way out, which I can say a special dispensations. During this time, you can liberalize this, your norms for credit appraisals, but at the same time, see that your monitoring and mentoring for the businesses is very critical. Day-to-day basis, you will have to perhaps support this businessman, and this challenging period is going to be there for next at least 2 years, I can say. Once we are back on track, perhaps the businesses will be actually running on their own. But as I said, unless there is some special dispensation, and we have not yet spoken about how the existing debt is to be treated, because
Yeah.
existing debt, unless we discuss about that, how that can be treated, we really don't know how, what is the future for either for the businesses or even for the banks. Because big question is whether businesses will survive, and if they have to survive, what measures bank will have to take. If banks take those measures, whether that is going to create an additional burden on the banks, and whether banks will be in a position to take those burdens. What are the enablers for the banks to take those burdens and support the economy? We need to discuss that first to understand the holistic picture of the situation.
Yeah. Thank you. So, let's take some questions from the participants. So, I have a question from a YouTuber, and he says, to give more credit to business and more to the MSME, why not simplify the GST and reduce the slabs from 4 to 2?
Now, this is a question actually in the purview of the government authorities, and
Mhm.
we should not be we may not be in a position to comment on it. But yes, aspirations are there. Public people today will definitely look for this kind of some kind of concessions, or remissions, I can say, so that whatever means are available for them to save and then use that for the survival or revival of the business, they will look for that, and there is nothing wrong. And one need to understand, if this is an unprecedented situation, if this is a life and death situation, then everybody has to be on the same page, that do the hand holding for each other and take them on the path of revival.
Okay. This another question that has come. We have also discussed this with some other subject matter experts, and this was that why not create a bad loan bank where
Mhm.
the bad loans are off, because the times are such tough times, as they say, require tough measures. Can we move them, and not for the NPA part, but at least those which are the COVID kind of having problems? Can we move it into such an organization? Your thoughts?
See, in my opinion, bad bank has its merits, bad bank has its demerits also.
Yeah.
I was heading IDBI bank, and a miniature bad bank was already there called SASF, right? So that stressed asset stabilization fund, which was created, where an IDBI bank, when it was actually restructured way back before my joining, they had transferred some loans into SASF, and then the recovery was expected to be during that particular time. On one side, there can be a focus on the if you create that kind of structure, that there will be focus. On other side, once it is out of your books, perhaps the ownership and belongingness of that particular unit will be lost. So banks which are owning those bad debts, perhaps they may lose their sight on those bad debts for the recovery also. The new mechanism which is going to come, whether that is going to come through ARC route, whether it is going to be a separate bad bank, what will be the structure of that, what will be the capital requirement of that, what will be the provision for that. So all those issues, unless we discuss one by one, we cannot say, we cannot arrive at that bad bank is going to be a good bank or bad bank is going to be a bad bank. But as of now also, instead of just looking at that creation of the bad bank, if we focus on actually handholding this existing NPAs also, in my opinion, many of the accounts could have been saved if there was handholding measures were available for the bankers. Number one. Number two, even now also, if we reintroduce those handholding measures today, if you look at it, Reserve Bank of India slowly withdrew all the restructuring or those kind of measures through which banks were able to handhold. In our country, in my 41 years of career, I must have seen at least 5 or 6 cycles of downturn and upturn. And this downturn and upturn actually comes in different sectors. sometimes in steel, sometimes in cement, sometimes in construction, sometimes in agriculture. So every time whenever those sectoral downturns were there, bankers used to do some kind of handholding. The regulator also was giving some kind of dispensation. Of late, Reserve Bank of India stopped all dispensations. Then there were whatever measures were there for the restructuring, CDR, SDR, all overnight on 12th of February circular, they withdrew. So there is no option today for all the bankers or all the financial institutions to push the lender only to the legal action. If you are not in a position to handle the borrower, obviously he is going to in a NPA category. So therefore, actually, we can save this NPA itself. And when this NPA is in my book, a banker's book, it becomes rather, it is right in front of my eyes. Otherwise, that we say, no, out of sight, out of mind. That happens when it is actually moved out from your books and given to somebody else for the recovery purpose. Secondly, the value of that asset itself will get deteriorated to such an extent that there will be a bigger haircuts. Now, there is a question which was being discussed, that at what value this account should be transferred to bad bank. That is again a big question. What is the realizable value? Whether we can transfer at book value, whether we can transfer at net value, rather net book outstanding means outstanding minus provisions, or whether we transfer at the realizable value. All these questions are there. And then uh, once the account becomes NPA, as it is, it starts eroding its value. Assets also start losing value. And then if we make them a dead asset and transfer to bad bank, it's going to further lose its assets. So in my opinion, uh, that may not be that helpful. Bankers' balance sheets may become clean. The balance sheets will start looking good. The balance sheet will start looking healthy. They may be in a position to raise capital in the market once this stress is out from there. This one, but then by keeping them within existing books also, it is possible to do that. Our balance sheets can be actually uh, strengthened like that also, and banks can improve. So there are rather pros and cons of bad bank. We cannot say, and I'm not the authority to say, yes, bad bank only is required, or no, bad bank is not required. But as a banker, I will say, and this is what being discussed also on various forums, what are the merits and demerits of the bad bank? If it is really going to be useful, if we are going to really have a better recovery, then we can push it for the bad bank. Otherwise, in my opinion, these are assets which already have lost value. The banks are actually taking a very huge haircuts. We can't afford to take that kind of haircut because it is directly going from the capital of the bank. Once it is going from the capital of the bank, banks are required to raise the capital. Insofar as public sector banks are concerned, they are looking only at the government of India for recouping their capital. Now, government of India also has their limitations. How much burden they will take for this recapitalization of the bank? So all these questions actually they are interlinked with each other, and therefore the government also will take calculative, well thought out decision if anybody is actually mooting this bad bank idea.
Thank you. Thank you, ladies and gentlemen, for a couple of questions that came across. I'm looking forward to more questions from you. So let's look at the another aspect of the finance minister's policy decisions on credit co-origination. So to rekindle economic activity, the FM had directed PSU banks to co-originate loans with NBFCs. However, credit co-origination has failed to take off. What needs to be done for scaling up co-origination of loans? Because NBFCs form a very critical part of our economy, and they provide a lot of credit to the rural side. So this is an important aspect of the finance minister's policy, but we don't see that execution again happening.
Yes, I agree with you, Mr. KK, because NBFCs really have done a lot for the development of our country alongside the banks. And NBFCs' risk-taking abilities are much more than the banking sector, than the formal banking sector, I can say. Now, when we talk about the credit origination, because there is a fundamental difference between the risk-taking abilities itself, because NBFCs take little higher risk, Bankers have their different norms insofar as risk is concerned. So therefore, even though on paper it looks good to say, okay, NBFCs and banks should actually do a co-origination, in practice, it becomes difficult because of our appraisal systems are totally different. So therefore, basically, first we'll have to arrive at a midway. Okay, what is the appraisal system, if at all it is required to be co-originated? Otherwise, uh, if there are ways and means to support NBFCs by through financing, today they are actually dried out. They are actually crying for the funding, and they are also actually standing on the verge of making defaults many times. They are running helter skelter for the capital as well as for the finance. Earlier, banks were their lifelines. Banks were wherever banks were not in a position to reach. We used to fund a lot of NBFCs, and NBFCs are doing on lending to the further segments or in the ultimate borrowers. So therefore, if but unfortunately, what has happened because of certain big NBFCs like ILFS and all, after their failure, really there is a the confidence of the bankers also is shattered, confidence of the market, capital market is shattered. NBFCs are finding it difficult. Therefore, perhaps the government thought, okay, if there is a co-origination, then it is possible that whatever liquidity is available within the banking system, that can be channelized through the co-origination, and it can actually use for the lending. But as I said, if co-origination has to be done, then we'll have to work out a common appraisal system wherein bankers also find it a little comfortable of taking those kind of risks. Number one. Number two, there has to be a revision in policy of the bank itself, because each bank has their lending
Yeah.
policies. Those lending policies will have to be, because when you are actually co-originating with NBFC, perhaps we'll have to relax some norms, and you'll have to be ready to take some kind of risk alongside the NBFCs. So that will have to be done. Then you will have to do some kind of revision into uh, what you say discretionary lending powers of the authorities which are lending. The orientation itself of the frontline bankers will have to be changed, that how the risk has to be taken. But once this is actually done in a structured manner, I think it is very well possible, because we can use the platform of NBFCs. They have a deeper reach into the hinterlands. They have the deep pockets to reach up to the customers. Their recovery mechanisms are much better. Their reach with the customer is much better. And the pulse of uh, the ground level realities, I can say that they are having much better than the bankers. So
Yes.
therefore, this idea is there. Way out is this, that let us work together, but then you'll have to modify our systems and processes for that.
So the policy was announced quite some time before, few
Yeah.
months ago, and like you pointed out, if these are the two entities having their own ways of doing things
Yeah.
and not willing to compromise, then we have a problem on hand, isn't it? Because if that is not sorted out, this will just remain a policy on paper, isn't it?
Yes, but in the meantime, I think somehow the authorities need to give confidence to the bankers to continue lending to NBFCs.
Yeah.
In many of the banks I have seen, whichever banks I headed, in fact, I was heading two banks, and then I worked on in four banks. We have some internal limits also for taking exposure on particular sector. Many of the banks are having very tight limits on lending to NBFCs, because if NBFCs are again, if they are able to work as a complementary system for development of country's economy, I think bankers also, and today bankers are sitting on a huge liquidity. They are finding
Yeah.
it very difficult to finance. So at least if somebody is financing, you support them. You see that how their systems are there, how their ultimate assets are functioning. You create some controlling system of reporting with the NBFCs. But if we work really closely, and this liquidity, if not direct lending, at least through indirect lending, if we are in a position to do,
Yeah.
we can actually support the development of economy. So my banker friends also should actually look into this, and instead of remaining within that policies and all, we can take it to the board. The policies can be actually changed to accommodate more financing to the NBFCs. And there are very good NBFCs actually operating. Their financials also better. So in this situation itself, if we help them, NBFCs will revive. If we wait for them to again deteriorate their balances, then that sector also will get killed, and then it will
Yes.
be difficult for our economy as a whole. That
Correct.
because one side banking is already weak today, they are not lending. Reserve Bank of India is putting so much of enablers, but still today, forget about COVID. Before COVID also, our credit growth was something around 6%. One point in time, it used to be 13%, 14%. And there is always direct correlation between the GDP growth and credit deployment in the market. If
Yeah.
credit deployment is not there, obviously GDP growth is not going to support the GDP growth. So one has to understand why credit actually deployment is not there. One side you have such ample liquidity. Reserve Bank of India itself is saying more than 8 lakh crore liquidity is there. Banks are still continuing to put money into reverse repo. That can be used for channelizing, and this exactly is a issue one has to sort out. How this liquidity is channelized through banking channel for the development of the economy.
Yes, sir. Thank you. So I think that's a very good point you make on the credit co-origination. We have NBFCs who have to be looked after, who are a great entity for the rural backbone of our country. We have a question for you, sir, from Pushpendra Khandelwal. He says, I think the accrued debt during this period should be put in a separate account, and that can be recovered after the end of tenure. And the second question he asks is, and why the accrued burden shouldn't be put separate accounts by the banks?
Yeah, thank you, Mr. Khandelwal. Actually, at one point in time, he was my close colleague. We have worked closely. I'm very happy that he has asked this question.
Okay.
Because earlier also I said we need to understand what is to be done with the existing credit. In my opinion, and this is my purely personal opinion,
Sure,
that
sir.
we need a deep restructuring of this existing loans itself. When I'm talking, it's not only restructuring, I'm talking about deep restructuring. Now, Mr. KK, if you have any time looked at our CDR mechanism, how it was working, because fortunately I was heading IDBI and I was heading also CDR mechanism, CDR EG mechanism, I was chairing it. So I have seen many good success stories that when accounts is really not having a good future or is struggling practically to come back on his own feet, how CDR mechanism was helping, because there was a deep restructuring. His rate of interest also was reduced to such an extent that which will be only affordable to him. Then it is spread over a period such that it becomes a sustainable for him to repay within the existing cash flows or within the existing EBITDA. So that has to be worked out. So similar mechanism if we introduce of deep restructuring of this existing debts, that means you take this entire existing debt. Today, working capital only on the banker's paper, it must have remained as a working capital. But the moment these units are opened, take it from me, more than 80% of these working capitals will have to be actually converted into term loans.
Okay.
Because there is no working capital. It is totally wiped out. The new working capital will have to be actually given to the units for revival of their businesses. So new working capital can be given separately. Existing working capital, whether you convert into working capital term loan, interest also has to be reduced. Existing interest outstanding can be actually converted into funded interest term loan. And there is one more provision under that CDR, which I used to like very much, that is ROR, that is right of recompense. That means the unit accepts that today my income is not good, therefore the bank is charging, let's say, at 4% to me. But going ahead, when my unit gets revived, I'm going to compensate the bank for the loss which they have taken on their books. That is right of recompense. So if 2 or 3 years we are in a position to handle these units, let's say 2 years, some units, very critical units, may require more than 2 years. Some units may require only 6 months. Some unit may require only 1 year. But depends on that. But if you take a larger picture and say, okay, to the extent required, we will stretch your repayments, give you additional funding for that, and that additional funding will not be actually part of that deep restructuring. That will be part of your revival of account. And this deep restructured funding, whether you stretch it for 5 years or 7 years, depending on cash flows, but at the same time, bankers and businessmen, because in our country there is always chance that some people taking undue advantage of whatever benefits are given. Yesterday only, Mr. Parekh, somewhere he was saying that RBI should not extend the moratorium because some people are taking undue advantage of moratorium. So that situation always prevails in
Yep.
everywhere. So therefore, when we are sitting for the deep restructuring, bankers will have to see that there is no chance for taking undue advantage. It is perfectly as per the business projections. Business projections will have to sit down. Businessman also has to be transparent and sincere to work alongside the banks for that kind of deep restructuring. Once that is done,
Yeah.
and secondly, when we are talking about deep restructuring, my request to regulators will be again that it should not be at the cost of downgrading the account, because the moment you downgrade the account, again the future becomes bleak. So as a
Yes.
special dispensation, as a one-time measure, we should allow that account to become to remain in the standard category. Continue that for next 2 years in a standard category. After 2 years, you feel that it is really not reviving, then you can downgrade. That provision can be kept within these
Good,
2 years, because it's again prudential norms. Reserve Bank of India can ask bankers to actually make some provisions, not exactly on bad debt provisions, but make some provisions prudently, so that when the account is really not in a position to revive and it gets downgraded, then that provision comes handy. Otherwise, if the account really gets revived, the provision can be reversed or retained in the bank's balance sheet. So this kind of some measures
are required.
are required. Then only the businesses
Sure.
will get revived.
Yeah. I like that thought of yours of ROR. I think that's something that we need to look at. Meanwhile, I have another question to you from Krishnanand Tripathi. He is from ETV Bharat. He asked a question: what are your views on extension of the moratorium on loan repayment? Some people argue it is being misused and will also induce the habit of non-payment. I think you did speak about it. That's what Mr. Parekh said. He said, right?
Yes. So see, extension to what extent?
Yes.
Because earlier Reserve Bank of India gave for 90 days. Again, they extended for another 90 days. Why they extended? Because that time we had not started this reopening. Now we have started reopening of economy. So
Yes.
now again, if you really create the moratorium, then perhaps undue advantage of that, those whose businesses are there, they also will not pay. And we know as a banker, once extra cash flow is given to the any of the promoter or the businessman, if it remains in his hand, obviously it gets diverted, and there is every chance of diversion of business. So therefore, instead of giving moratorium, if we are in a position to restructure the debt in tune with the available cash flow of the businesses, then I think that will be a better solution than giving the moratorium.
Okay, thank you. So we talked about credit co-origination, and a very attentive listener, Mrinal Bhattacharya, asked you a question: is on lending concept within the direct lending tranche is better proposition than the co-origination?
Obviously, because on lending is as per the existing system that
Yes.
we keep on giving to NBFCs, and bankers are more comfortable in that they are not required to lower down their appraisal systems, or they are not required to scale down some of the flags insofar as the risk is concerned. So bankers will always prefer that we finance NBFCs and NBFCs on lend it, because again, when you do the co-lending, the asset management, the assets which we are co-lending, that also it should not become that it is falling between two stools. That who
Yeah.
will monitor those assets, whether NBFCs will monitor or whether the bank will monitor, and those kind of attitudinal issues should not start. So therefore, as I was earlier also explaining, bankers should actually now think of uh, lending freely to NBFCs and create whatever checks and balances you want, for that purpose. But this on-lending model will work much better than the co-lending,
Okay.
co-generation,
Co-origination.
co-origination. Yeah.
So I have another question from Mr. V.G. Kannan. You must be knowing him, ex-chairman of IBA.
Yes.
So he puts a rather long question. In project finance, cost overruns funded through debt has been one of the reasons where the gearing has gone up. While promoters always promise bringing equity to meet the shortfall, they throw up their hands. Instead, the additional interest over and above the projected interest during construction should be either brought in by way of equity or set aside and converted to equity in favor of the bankers at par, thereby reducing promoters' stake, and the original loan disbursement should continue for the project completion rather than for the interest servicing. A completed project will give a higher price to the equity, and the bankers can exit at a profit or even sell it to a rival. Sir, what is your opinion?
I perfectly agree with Mr. Kannan. He is a veteran banker.
Yes.
And this used to be there when DFIs were there. Actually, when you are talking about, project lending, normally these kind of situations always arise. That project gets some escalation. There is either escalation by time or escalation by cost. And both of them actually have impact of cost by way of interest burden going up.
Yeah.
And always, whenever we have seen there is a escalation, cost escalation in any project, the equivalent or matching contribution from the promoters doesn't come, because many times either they show their inability, whether it is a reality or whether it is not reality, but they raise their hands, they can't bring it. Now, in any project lending, if you look at it, why bankers are they are pushed to the wall, because in any project, the banker's stake is more. 25%, let us say, a promoter has brought, or even if it is a, let's say, bankers have appraised at 30%, even then 30% is a promoter's contribution, 70% is a bank's contribution. Banker has always seen, and always we look at it, that my exposure is actually more than whatever there. Suppose if this project gets completed, at least my existing exposure will get, rather it will be safe. But then nobody stops the bankers to ask the promoters to give equity, because if I am putting money, obviously I will bring it through equity. I will not bring it through debt and burden the project again. But if I bring by way of equity, there is every chance that I get a better return. And this again, I have learned when I was posted in IDBI, that how in project appraisals, one can insist for getting equity into projects which are having really a better future. And when actually project come to us, everybody tells that there is a better future. And therefore, many times promoters, they don't want to give the equity, because they know the project is actually going to have a better valuation. So they don't want to lose equity portion. But if his project is going to be survived with additional funding only, and if he is not in a position to bring additional funding, and if he is looking at the bankers for the additional funding, the bankers can very well say that I will give you funding only if you are giving me equity to that extent, and that equity also at par.
Thanks.
If it comes at discount, nothing like that.
Absolutely. Thank you, Mr. Kannan, and thank you, Mr. Kharat, for that question. Sir, we have actually passed the hour, but are you okay to take a couple of questions?
Yeah.
Okay. So, Tyag, can you please ask a question? That's a direct question coming to you from Tyagarajan.
Okay. Good evening, sir. My question is, we've been talking about the less demand due to the COVID reasons. People are not coming forward due to, we don't know what going to happen in 2 months, 3 months, whatever. My question is simple. So demand and the credit are two sides of the coin, right? If we have to revitalize the economy, demand is a very important element to kickstart.
Yes.
Now, my question also is, if government starts investing in huge infrastructure projects, there is a report from the Ministry of Finance, or I think it's a DA, Department of Economic Affairs, which says next 5 years there is 100 lakh crores why not government look at near term, 1 year, 2 year of these and start investing so that there is a demand coming through, let's say, public sector units, down to CPSEs, down to MSMEs, and to the one-stop entrepreneur. So there is a demand kicking in, and that gives you offtake to credit. Why can't we look at something like this, which government is not coming forward to, or we are not knowing? We are only saying there is no demand. What is your thoughts on this?
First of all, Mr. Tyagarajan, I agree with you on one point that most of the points you have put it very, very rightly. But one point which appealed to me very much, and which I also will advocate, that the infrastructure development and all, it is going to take, it is a long-term measure for creating the demand. Obviously, we need a lot of infrastructure development, and infrastructure development will bring create a consistency insofar as employment is concerned, insofar as cash flows are concerned, because these are huge. 1 lakh crore plan is there, but today the situation is such, and this 1 lakh crore, they are not announced after the COVID. The 1 lakh crore infrastructure, they have been talking much before the COVID also. After the COVID, what we need is a quick fixes. There is no time for, time consuming measures that, okay, we will do these reforms, or we will do this, or we will undertake a bigger projects. If these projects are immediately launched, and if these projects are creating employment, and if contractors are running their machines immediately on site, and if the activities start buzzing, then it's okay. If it is still on the drawing board, and we are talking of, inviting the bids, we are talking of, creating the rather ecosystem ready for launching of the project, then it is not going to help in the present situation. In long term, yes, in long term it will help. Now, your question was why government is actually not directly investing in these smaller, rather short-term projects. Here also, this is again my personal opinion, that today the 3 lakh crore or whatever other, even 2 lakh crore in the agriculture sector, or even fund of fund, or even subordinate debts, these are all debt instruments. And when people are not in a position to sustain the existing debt itself, giving additional debt, first of all, mentally they are not prepared. Secondly, putting burden of the debt on them is very, very difficult for them to get quickly on the revival path. Out of that 1 lakh crores, if the government uses, let's say, even 5 lakh crores for the direct support to the businesses, and keep the tap of, this is not going to be as a aid, direct aid. I am saying give them this not by way of loan, but by a, we give a small businesses a seed capital type of support. So that kind of, some kind of support, if government is giving in this situation by way of equity, let us say they are giving by way of equity, the government equity remains there, no issues. 5 lakh crore, if it distributed in all these MSME units and small businesses, and little above even I will say mid corporates, it will give boost for their revival, and then definitely we will be in a position to come back. But then it is up to the government. We can only look for the best, we can hope for the best. And these suggestions, many of the business forums have actually put up to the government, that government direct support is very much required than support through by way of lending. But I think the government is also listening to all those
Yes.
government bodies. They will take some concerted discussions and calculative decisions on this. I hope if the government comes out with any scheme of giving 5 lakh crore as a direct support, economy will really get a greater boost.
Thank you, sir. So quickly, you can answer it because we already run out of time, maybe in 2 or 3 sentences. The thought of restructuring PSBs in line with the private sector banks, will it help?
See, again, the thought is very good, but when to implement, the timing has to be seen.
Okay.
If somebody talks about implementing in this current situation, then perhaps it will not generate the synergy what we are looking at. Privatizing the bank also, at what cost you are privatizing? Today, all the banks, particularly public sector banks, CPC, at what value they are getting traded as against the book value, that PB ratio normally we see. So most of them are less than 0.5. Forget about less than 0.5. Some banks I was seeing other day, 17 paisa, 20 paisa of the 1 rupee. If at that valuation, if government or if anybody is talking about the privatization, that means you are losing your own money and putting in the hands of the private sector. Obviously, when the private sector restructure these banks and they start doing good business, their valuation is going to go up. So instead of that, keep them as it is, revive them. What are the issues? And all these days after nationalizations, government has been supporting bank, and banks also have supported to great extent for the development of this nation. It's not that there is no contribution. In fact, if at all today we are reached to this stage of development in our country, I will salute to all those bankers who have been contributed, all those banks who have given their immense contribution in this development. So another few years till we come out of this economic slowdown, the banks also come out all these NPA issues slowly. See, earlier the Reserve Bank of India had put so many banks under PCA. Now many banks are coming out of PCA. So allow them some time to come out of PCA. Let them stand on their own feet. Let them do a good business. Once their situation is improved, then we can look for even privatization.
Thank you, sir. So, final thought, final line from you, sir, saying that we have talked about so much today. I mean, you have given us a complete view on the entire credit and where we are, and we are best suited. We are multi-sector economy, etc. So, though it looks a very, very daunting task, the economic slowdown has lasted over 4 quarters now and is unlikely to go away in a hurry. You still feel there is hope. It's not all over. We can still revive our economy and credit flow will happen. Are you very confident of that, sir?
Yes, I am very much confident because the key of survival is survival of this all businesses.
Yes.
Survival of our banking and finance sector. And for there, we already discussed what are the ways and means. If we are supporting these people through additional funding, without that, it is difficult for them to survive. They need additional funding, whether you give them by way of equity, whether you give them by way of grant, whether you give, but let us avoid giving them by way of debt. Additional debt may not they may not be able to come out quickly. They will come out, but what we need is a quick fixes. Secondly, if we are in a position to do some kind of mechanism wherein these accounts have not been downgraded, it will reduce the burden on the banks. Banks recapitalization requirement also will be reduced. Their balance sheet also will not look so much strained. If we give those kind of handholdings to the businesses, right now IBC door is also closed, rather because it is suspended for some time. So we have no other way than doing some kind of handholding and seeing that these units are actually revived. Once these units are revived, I'm sure economy can be revived. Only thing, we need to take those courageous decisions, and those decisions within the framework. Whenever we talk about any dispensation and all, any changes in our prudential norms, the reply comes that no, we have to align with the world economy, or we have to align with the, let's say, Basel norms, because those are the worldwide norms. But I know for sure many countries are not even following Basel norms. So when those countries are also worldwide, everywhere it is a difficult situation, we need to look at it whether we should live for the Basel norms or we should live for the survival of our country. If that kind of approach is taken by all stakeholders, I'm sure we can revive. Our Prime Minister always said, "Sabka saath, sabka vikas." So that sabka saath chahiye, to sabka vikas abhi bhi ho sakta hai. Thank you.
Thank you, sir. Thank you, Mr. Kharat. It was wonderful talking to you. I think the participants will go with a lot of good thoughts, good information, and also the fact that there is hope. In this daunting times, any of these kind of hopes are extremely important. And I'm sure with the kind of economy and the kind of demography and the kind of multi-sector economy we have, we will come back strong. And these are the words of Mr. Kharat. Thank you very much, Mr. Kharat. Before I wind up, ladies and gentlemen, tomorrow we have Mr. Vineet Rai, and the topic is new social stock exchange, path breaking or experimental. Okay, so we are going to talk about social stock exchange, something new. So please do join us and join me in wishing Mr. Kharat goodbye. And thank you, Mr. Kharat. Have a wonderful day ahead of you.
Thank you so much. Thank you so much.